All right. So, first and foremost, welcome everybody, whether you've been here a while or new. It's great to have everybody join on 8:30 on a Monday night. Um, just I wanted to preface one thing before I did get into our overall discussion on order blocks and just identifying liquidity, and that would be over the last, I'd say, really about 2 weeks now. You've probably noticed I really haven't been posting too much in terms of the wicked trades that I've had on Nasdaq or anything like that. And to be honest with you, I think it's just a byproduct of what we're currently going through, and I can give you a deeper explanation as on that. But you'll notice that a lot more of my messages to everybody have been individual names, and it's just ironic how the individual names have actually been giving a much more clear picture than what Nasdaq has. Um, to me, the explanation for that was, look, from really since we started live trading in July until now. The only blip where I was taking limited trades on futures was during August, which was really a choppy and really a sloppy month in terms of high wicks, getting stopped out, more than typically than I usually would. But that's something that I've started to notice a little bit last week, where the setups just they weren't as clear as day, and when they aren't as clear as day, there's one of two things that you can do. You can either maintain your level of patience and discipline, or you can keep trying things and getting stopped out all over the place, and nobody wants to do that. So realistically, to me, there was probably two setups on Nasdaq. I'm sure there was more, but to me, 10 to 11, 2 to 3, those are my prime zones. And from 10 to 11, we did have that 10 a.m. silver bullet, which paid out well. And I actually did take that trade. I believe Mo took it as well. And then the second trade that I had attempted was that 2 to 3, and I was literally one pop short. And what I mean by that is I wanted to, or I tried to short this right here, and ended up getting stopped out. Whereas, look, if I waited until 3 o'clock, look at that melter. I mean, this really happened towards right before close, so it's not something that I would ever take anyways. But that just to me kind of signals that might be a little sloppier this week. Going into today, the first thing that I had posted was no high impact news data today. Typically, those are the days that I try to avoid, other than that 10 to 11, 2 to 3. I'll always look during that time. But if we don't have any high impact data drivers, I really kind of shut it down, and I don't look all that much throughout the day. I was looking at a couple individual names, but nothing too serious as a result of that. But yeah, to me, I mean, the way that I look at that, the fact that over the last week and week plus, really at this point, I haven't been posting any of these flashy Nasdaq or anything like that, and to me, I see that as growth, because in the past, like August, I would be getting stopped out all over the place, and even before that, it was way worse. And August, I was glad that I was able to identify. Um, we were going to be a little sloppy in terms of price delivery on smaller time frames, but that also kind of plays into what we're seeing right now. The overall and overarching trade, it looks pretty clear, right? But the in between these little weekly candles, right? These are 5 daily candles. Inside those 5 daily candles, you got 23 hours that the futures market's open, that are chopping it up in there, and then you break it down even more, and there's so many more candles. But as we go down in time, I've noticed that it's been much more sloppy. But when you look at the overall picture of these, they're still clear as day. And this is even with those individual ticker names. I mean, over the last couple of weeks, how many of these names have we went through that have all reached, terminus of my model? Apple just did it last week. Tesla not yet. Nvidia has. Netflix did today. AMD did last week. Amazon did 2 weeks ago. Google has not yet done it. Microsoft has. Um, Mara just did it today. Shopify did it already. The list goes on. There's so many. ARKK did it already. Coinbase did it already. So there are so many names that on the higher time frame are just smooth, beautiful, have taken care of business, and on the big board here, even Nasdaq has completed it, but now it's kind of the waiting game for me, and this is where I don't want to say it gets difficult. It's just annoying because, I kind of need a jump start. Let me get 4 days. If we're to close just like this 4 days from now, my idea would just be, okay, look, I think we're going to move higher. We're making a bullish imbalance up through outside liquidity, which we're going to get to in a little bit. That would just be the overall idea. But being that we just swept higher time frame liquidity last week, I know when higher time frame liquidity is swept, typically that does tend to lead to reversals. But what's the caveat to that? We make a higher time frame imbalance to the upside. That kind of negates that. So it is kind of a waiting game, and I know it stinks. Trust me, I'm trading it as well. Yeah, now we wait exactly, Kale. It's really frustrating being in the moment on it. But I think, this is nice for me because in August, I wasn't trading individual names, swing trading or anything like that. I was dead focused on the indices. Did I have a couple, little names here and there that I was trading shares of? Yes. But not swing trading options or anything like that. Like Upstart has been taking more of my, mental real estate than really the NASDAQ has at this point. And it's really just because I'm waiting to see what's going to happen next year. And I feel like I have a good enough thesis as to why I should wait. If we were to go back historically, you'll notice that when we do take out higher time frame liquidity, if we don't get that wicked up and immediately jack down and we create some sort of imbalance higher, to me, the direction is higher. Also, something to think about is seasonality. December, going into the holiday, right? There's probably vacations that are going down right now. Well, that takes people away from. That's going to take away some of the volatility that would typically come in and out of the market. Last week of the year, one thing that you could, I don't want to say bet on, but because the year was a good year overall in terms of where we were at the beginning to now, you might see some tax loss harvesting on some of the worst names, like the worst performing names, but on the better names, you might see a continuation or a continued push to really kind of decorate the books going into the next year so that they have a nice little uh, I don't know what the word, it's not portfolio, but just to show off prospective clients like, oh, look, this is the numbers we did last year. We did this, blah, 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 blah. And it looks better for them to acquire new money. So those are just all little things that go into it. I know I'm not like the biggest believer in that crap, but I do think it will play a role as we go into next year with a lot of uncertainty. So, um, but anyways, so let's get into it. First and foremost, I think I'm going to lead off with liquidity. The reason I'm going to lead off with liquidity is because it's very, very difficult, brief. So I think I can kind of knock this out really quickly. So we'll go through a bunch of them, but just right off the top, right? Um, where can we identify our buy side liquidity and our sell side liquidity? So just by looking at this chart, I would just, it's really as simple as identifying your swing highs and swing lows, right? So think about it. At this point right here, what had to have happened, right? We obviously had to have had some selling on this candle, right? Or throughout this candle, in order for price to be driven down to here, right? That's logical. It makes sense. So with that being said, and with people who can actually move markets, I cannot. Wish I could, but I don't have the funds for that. But think about it this way: if those people have enough money to move markets, they're not going to want to be wrong for more than a couple of points, right? Just think about that, right? The amount of money that it's going to take to move something like NASDAQ is going to be a substantial amount of money. And they're not going into these trades like retail traders without stop losses that are resting above to protect their ass just in case, right? Think of like somebody who's working at a firm and they just get promoted or something like that. Hey, you finally get to trade, your own something like that, and then they get absolutely smoked on a dumbass trade and don't have a stop loss on it. I mean, that's you're immediately fired, right? So the risk parameters in terms of what trades that they're actually placing is extreme. And just from my own personal experience, I don't really know the total in depth of that, but I have a buddy who works at one of these funds, and he said just to actually get a trade out, right? It's not like him sitting at the computer like you and I, and we press the button and it just immediately goes through. It goes through like 7 people prior to actually being put through. So, but anyways, yeah. So we would expect that on a sell order, right? if you're in terms of futures, even in terms of common shares, right? If you're selling or shorting, right, your stop loss is going to be um, in the form of a buy stop. Right? You have to buy that back, just at a higher price. You lose the difference, right? So, um, with that being said, the buy side liquidity or money, right? Those stop losses above on those who went short is going to be resting right above that swing high, right? And vice versa. Sell side liquidity. I mean, this isn't the best example because we've been on an uptrend. Let me just look if I could see one that's sure. Okay, so here, look. So at this point right here, right? Oh, whoops, I did that wrong. Here it is. Good. Okay. So at this point right here, what had to have happened to drive price up? What was that? About 2,000 points, 2,300 points. Somebody had to go long here, right? And if they're going long here, their orders are going to be in the form of um, sell stops, right? So they're buying, or to come back down and smoke out, it's going to be in the form of a sell order, right? So that would be our sell side liquidity. So when price gets back down into here, all of those longs get liquidated and their money becomes free. And typically that's what the market is using in order to continue moving, right? The only way that I look at liquidity is as like gasoline or something that or charging your like the charger to your phone, right? Without gasoline or a charge on your phone, it's not going to do anything, right? And that's the same thing that goes for the markets. And that's why I think people who use volume and everything like that, to me, it's just a lagging indicator because, if you're to turn on volume and you would notice that when we do sweep high time frame highs and lows, you're going to notice that the next candle typically is a high volume candle. Oh, where did that come from? To me, the market is driven algorithmically. It's all, computer based, and the money that's necessary to move things are oftentimes already on the chart. And that's just through whether it's previous orders from funds, institutions, anybody who's got a 401k or anything like that. Like all of that money is already there, right? And you never hear about anybody ever getting arrested for pumping Tesla, pumping Apple, pumping Microsoft, Netflix, this, that, right? They're always pumping penny stocks, right? Why is that? It's because the amount of liquidity that's necessary or that is already present on the chart for those smaller names like penny stocks, it's not there. So when there is an influx in that liquidity, a specific name, that can actually manipulate price, right? We cannot, I personally cannot, I don't know if we were all, maybe Seeker, but maybe if we all were to pool our money together and try and move something, I guarantee that it wouldn't even work on a mega cap or something with an insane, right? Not feasible. It's not possible. So, but anyways, but using the concept of liquidity, we know that without the market, without liquidity, it's not going to do anything, right? So if you get that consolidation period where it's not really doing much of anything, what does that mean? We need more liquidity, right? So whether that comes in from a fund, institution, you name it, big money traders, I don't know. Either that or the market is going to chase for its next point of liquidity, which would be a swing low, swing high, whatever. Um, but to me, all the market is doing is just a never ending cycle of continuously finding more liquidity in order to generate moves. And to me, if we can identify what our higher time frame draw on liquidity is, it makes trading so much easier. For example, this run up that we had on NASDAQ, to me, from this point, right? It really was this week where I started to feel super confident in it. But I remember, I don't know if Sean's in here, but Sean and it was on a Thursday, I'll never forget. And Sean, I think, actually longed the low wick. I took the first imbalance on a smaller time frame off of this low here, and we took that sucker up. And I remember because I was haunting Ryan Surface about this, saying that the Bears' asses are going to be over the fireplace for Christmas time because we're going to the high that we had identified. The number's a little different now because of the contract rollover and everything, but yeah, we were giving him a hard time about it because he was so bearish at this point. But there were so many things that lined up for us to think or consider going long, and obviously it worked out. But the reason why I'm even talking about this right now is because to me, I had a really good feel for where the draw on liquidity was, which was initially this high, and then it was this high, and then it was this high. But I always felt like I was in the driver's seat and I was on the right side of the trade, so that when I did have a winning long, I felt pretty good about letting that sucker run. And that's where a lot of these, if you go on like Instagram or something where I post the videos of the executions, you're going to see a lot of those big trades are coming from me, not just taking my profit at my specific marker, whether it was 20 points, whether it was, whatever, any specific point of buy side liquidity. But I was looking for it to continue on higher, make an imbalance up through previous liquidity in order for me to, continue playing and let it actually breathe and let the thing run. So to me, having an idea of what the drawn liquidity is probably one of the most important um, things that a trader can really incorporate into their style. Now, you might say right now, well, Mando, I see a swing high and a swing low here. How can I determine what is going to be the drawn liquidity? And to me, have I been wrong in the past? Absolutely. But one thing that has totally helped me identify and feel like I'm in the driver's seat a little bit more often than not is because I look at what is our market structure. And if we have a bullish market structure, so again, the reason why I have my fibs from low to high is because we took out this high right here with that price run, right? So to me, market structure is bullish, right? And if market structure is bullish, when we get our discount retracement, I am then automatically targeting buy side liquidity as my ultimate target, right? And we can go through, yeah, it happened on NASDAQ right here, but check this. We'll go through Apple. Here it is. And this is why my model is effective, because this happens over and over again. There's Apple. Tesla is yet to do it. We can look at that one later, but NVIDIA right here. I'll show you the first one, and we're about to do it again for the second time. So ready, from low to high, retracement, gone. There's your first. Here's your second, retracement, going up, back up for buy side liquidity. Netflix, another awesome one that we just we knocked out of the park right here. Ready, so from, hold on, I have them. It's going to load. There it is. Low to high, retracement back down into discount, 79%, bullish imbalance. That's a fair value gap right there. Takes off up for the highs, right? So I feel like I have the upper hand because I know, okay, we're in a bullish market structure. After we get that discount retracement, I'm targeting those highs, right? And look, even if, right, let's just say, none of these worked out for me and I was wrong on every one of them, the bottom line here would be, at what point would I consider getting out of this, right? The low of the candle that created the imbalance. So really, I'd be risking $18 for a potential $130 in gains, right? I didn't catch it all the way down here on Netflix. It wasn't a name that I typically watched every day because I wasn't looking at all of these individual names until just recently. But but that's as simple as it is, right? You're really, your risk is so pinpoint and accurate as, okay, look, I can lose, but it's not going to be a loss where I'm like bag holding or I'm begging for this thing to go higher or I'm not going to be able to feed my family, right? It's never going to be like that, because I know, based on my own model and my own strategy here, that as long as we get down into a discount imbalance, I'm going to give it a shot, and I'm going to target buy side liquidity. And look, in terms of our range, right? This, think of this as 100%, right? The whole range, right? If we're taking our longs off 79%, right? That means our potential reward is 79%, and we're risking, it's even going to be less than the 100, because I know that if it breaks below the low of the candle that creates the imbalance higher, I'm out. That's it. So it's really never going to be anything that's going to completely wipe you out. And I think that is the biggest problem for a lot of people. Flashback 2 years ago, that was my biggest problem. I could not accept the loss. There were so many instances where I said, I would rather watch this SPX contract go to zero than take that loss, just in case, right? To me, that's not sustainable at all. If you want to be consistent and profitable for a long period of time, I don't think that is a favorable method. I know there are some people who actually preach that, well, you shouldn't be in the trade if you aren't willing to let the whole thing go to zero. Yeah, okay, I get where you're coming from, but at the same time, you know how many traders that wipes out in just one or two trades, right? That's rough. And sometimes people don't come back from that and they quit, and they could be putting in all this work all the way up to that point, but you get wiped out one too many times and you quit because of it, just because there's zero risk management involved in your, you know, trading plan or your strategy, I guess you could say. So, but yeah, that to me, that's it. I mean, if you were to flip this upside down right now, it would be the exact same thing and just with a bearish market structure. So if we have a bearish market structure, to me, sell side liquidity, that would be my target for my short trade. Um, and I would be looking for a retracement back into discount in order for me to take that from, or just make the risk reward make sense. So it could be, let's say we got this off the 62%. So we're going to potentially make 62% of the range while risking X. It's going to be much lower. So the risk reward always to me is going to make sense. And I know, or I feel like I know and have an upper hand in terms of where price is going to go. Right. And of course, just go into the Mando model channel on here and on the Discord and just go through it. There's so many examples of it. I don't post it because, I'm trying to brag or anything like that. It's just I'm just showing you that it has proven to work. Um, does that mean that you're always going to be right even when it does work? No, sometimes your execution stinks. I have that sometimes too, where maybe I buy in and I get a low wick and I'm like, no, I'm not gonna go any longer, because then maybe I would lose out on $400 on this trade when I typically only want to keep it in between a range of 150 to 280, right? But sometimes I jump the gun a little bit, and my execution is the reason for my loss, not necessarily the actual setup in itself. Um, so that's just the concept of liquidity. If anybody has any questions on that, feel free to pop them in the chat right there. But um, so yeah, um, I'll give you guys a second, and if anybody has any,
Course.
yeah, I hear somebody. Anybody? No, somebody had their mic on. All right, no worries. Either way, let's just take a look and we'll go over the idea of a order block. Okay, so an order block, I think it's really important just to understand what it actually looks like. And then with that, we can kind of build from there. I see somebody just put in the chat right now. Continue. Yeah, we can look at Adobe too. We're just running against the clock here because of this stupid Zoom crap. If anything, if I get cut off here on the order block, we can just pop into Cantina. I've recorded a lot, but for anybody who just came in, the reason why I'm recording this is because one of the members of the group is running into some hard times and they're unable to attend. Their health's not permitting, I'm guessing. So, I just want to make sure that they want to stay in the group and they want to make sure that they are, um, you know, staying up to date because they want to continue to get better. So that's pretty inspiring, I guess. Um, but anyways, if we take a look at just what a order block is, let me just see off the top of the bat if I can pick one out right now. Here's one. Okay, we didn't get a retest of it, but just for optics, I think this is important to see. So this is what an order block candle is going to paint like, right? So again, we're on the weekly time frame. These occur on all different time frames, whether it's a 1 minute, 5 minute, 15 hourly, daily, weekly, whatever. To me, I'm only really I don't want to say concerned, but I really only focus on the higher time frame order blocks. Um, and the reason for that is, and just simply put, the amount of orders that are coming in to form a 5 minute order block is going to be nowhere near the amount of orders that are coming in to form an order block on a daily candle or a weekly candle, right? So by using the higher time frame, to me, it is you also notice that they're much more effective as a result of that. But um, one thing that I've noticed over time is that on days like we kind of had it today, where we didn't really form all that many imbalances, we will be forming these order blocks on smaller time frames. So you can essentially use those order blocks as a way on a smaller time frame as a level of support or something like that. But to me, it still would have to follow my criteria, meaning that that bullish order block that formed, I'm not going to look to buy off of it unless it's down in discount. So nothing changes in terms of where I'm buying it, right? So just for example, let's say that there was no bullish fair value gap here and we had an order block. I would treat it the exact same way. As long as it's in discount, that's good for me, right? But anyways, I'll just show you quickly. I see two examples right now, one with no test, one with a test. So first and foremost, this is what it's going to look like for a bullish order block right here. So it is a down close candle. typically would sweep some sort of liquidity, so taking out some lows right here, down close candle, followed by an up close candle that takes out the open of the previous. So it looks just like this. Right? Um, and okay, so at what point, seeing this pattern, what would be our the level that we'd be focused on? So I've seen two different ways of it. I use the latter, but I'll show you the way that I guess is really the real way to use it, and it's the entirety of the candle, of the down close candle followed by this up close. And you can use this again the same exact way as you would use any of the imbalances, right? It's just another, I guess, clue, or the way that he refers to them is a PD array. So just another form of a setup, I guess you could say, right? But the way that I use them, and this is really kind of just to like limit the amount that I actually have on the chart, and I am one who typically likes to let wicks play out for the most part, as long as it doesn't take out a key level. I'm not going to just have my stop loss right below this imbalance, right? That's not how I roll. I usually let the candle do its thing, and if it's too much, I wouldn't be in the trade in the first place if it were to go back down and sweep my low. So, but I use the body of the candle that creates that order block, and to me, just it limits the range a little bit. Like in this situation, what would it limit it? It would limit it about $2. Sometimes that extra $2 might put you over the edge on where you want to stop out. You might stop out and then immediately hold and take off. So, um, but we're down to 10 minutes here. So I hope that that's the bullish order block. I hope that makes sense. But now let's head on over, and I'll just show you an example where price actually retested. Like, we haven't gotten back down to this order block just yet on Netflix. So, and that's another thing, just like gaps, order blocks don't necessarily have to get filled or touched. Mo here, don't some people also use the open to the high of the wick, open to the high of the wick like this? Yeah, so that's the thing. I mean, to me, my biggest concern is having way too much on the chart and also having an enlarged range. So that's really why I just use the body of the candle. But some people, I've even seen this, and where they just draw a line here and they're using that. But the idea is this down close candle is your order block, right? So where you pick and choose to enter off of. And I got to be honest, if you don't feel comfortable with order blocks or anything like that, like I rarely ever trade off of them. Just to be straight up, I never. I honestly, I in the past I have, but not not at an extended clip whatsoever. So just to preface it with that, are they powerful on the weekly time frame? I mean, yes. Here's an example of it. Here's your order block, up close candle followed by a down close candle that takes out the open of the previous. Here, I'll just do it the conventional way. Price gets up into 50% of that bearish order block right there. Dump, right? So it's another level that when you don't have these imbalances forming, that you can use as a way to kind of drive your trade. This one rejected twice, actually. Here's your first right here, tracement into it, rejection. Second time, tracement into it, rejection again. And this is just on Netflix, right? And just like any other setup that we've ever talked about, the more times that you are getting into a specific level, the less likely it is for it to hold up, right? Think of all of this as that teeter totter. As you put more sandbags on the other side, more than likely going to balance out at a certain point. And when you get that balanced price range, typically what's going to give you the green light that it's going to continue and not respect is a bullish imbalance through it. Bingo, right here. There it is. So this is a bullish breaker, so don't mind that. So that would just be on Netflix. I'll show you more examples on NASDAQ, so it's a little more, I guess, you know, makes a little more sense, I guess you could say. So this would be considered an order block here. Price has not yet retraced down to it, so obviously not as worried about it, but down close candle followed by an up close candle that takes out the high of the previous, right? Here's a bearish order block that played out. So up close candle followed by a down close candle that takes out the open of the previous. So we would use, I'm going to use my method here where I just use the body of it, and there it is, gets up into it and dumps, right? Because again, you might be looking at this and saying, like, why would this reject? I don't see any imbalance, right? Maybe on a daily or a smaller time frame, you can pinpoint it exactly and see some sort of imbalance. But if we're just looking at this, like, we should be able to justify any move on any chart on any time frame. That's my opinion, and I think I can do it. And I'm not just saying that because it's me, but I really do think that I can justify any move, any chart, doesn't matter. Really, all I need is information to the left to give me that idea. And just as a, I guess you could say, to reinforce just my model as a whole, right? If we were to look, this low right here was taken out with what price run? High to low, retracement back into where? Discount, order block, right? No imbalance here, but we have an order block. There's your rejection, right? So that again just lines up. It just shows the efficacy of it, I guess. And here's another example. I mean, this is not an order block, but ready, you have your, okay, we took out this low with what price run from high to low. There's your retracement back up into discount. Why did it reject right here? Here's your bearish fair value gap right here. Bingo. Should be red. It's green right now, but it'll, and there's your test, there's your reject. So and then, obviously, why were we considering long here? If we go back on a higher time horizon here, you'll notice it's a bullish trend, and this is just a retracement back down into discount of a larger horizon setup that we get into discount and take off for the highs. So, how does everybody feel on the order blocks? Again, I got to be straight up. I rarely ever take trades off an order block, but when I'm looking at the higher time frame, it is good to have an idea of what they look like, and I guess understand that, look, we do have an order block here. There is a potential for us to reject that, right? Um, Rejected the first time, gets through the second time. So, um, but that's why I think they're valuable. So, yeah, I see a chat right now. You confirmed it for me. Thanks. Thank you. It was a bigger part of your training. Oh yeah, no. So yeah, I mean, I think I should lead off with that. I typically have recently at least been talking about them more, and it's just because I am looking at the higher time frame in terms of a lot of the things that I'm swinging. And they happen every day on really any ticker that you're looking at. I'm just more concerned with the higher time frame order blocks, and the reason why I'm more concerned with the higher time frame order blocks is because think about it, the amount of orders that are used in order to generate that type of look and that type of candle. It's pretty substantial amount. So, um,
Warriors suck. So I tried to tell you that in the off season. You didn't listen, but that's okay.
somebody.
Ball don't lie. I knew it would happen, so I tried to tell you. There we go. Got somebody threw me in.
Oh, that was Kale. Ball don't lie, Kale. All right, let's go look at Adobe if nobody has any other questions. But yeah, order blocks are definitely helpful in the higher time frame. Smaller time frame, eh. When you have consecutive down close candle that sweeps a low, what do you use as your order block level? Consecutive down close candles that sweeps a low. Um, I'm not so sure what you're meaning by that, because it's going to have that same look. So for a bullish order block, it's going to be a down close candle followed by an up close candle that closes above the open of the previous, and then vice versa. On a bearish order block, it's going to be an up close candle followed by a down close candle. But if I'm understanding correctly, and I only have 3 minutes here, but if you have a order block through buy side or sell side liquidity, uh, typically that's kind of a telltale sign, like how I say, oh, I want to see an imbalance form, whether it's up or down following the sweep of liquidity to kind of determine my next direction. If you get a bearish order block forming off of after taking out higher time frame liquidity, that's a pretty good telltale sign that things might be reversing. Yeah. But let's see how quickly we can do Adobe, because I know you wanted to look at that one. I used to have it over here. I definitely don't have it charted, but let's take a look quick because I got 2 minutes left on this. Uh, okay, still a beast. Um, okay, so I could tell you right off the bat, this is not something that I'd want to trade right now, and this it lines up a lot. Ooh, I do have some. I think this might be daily levels, but oh wait, actually no, it's not. Hold on, I have charted this sucker. Check that. Okay, so look where we're at right now. Yeah, this is either the higher time frame, of course, either the best short of your life or the quickest stop out. That's the way that I would view it. Where would my stop loss be? It's still way too high, just not something I'd be interested in trading. But this would be an area where it would make sense to stop out. Also worth noting, look what happened look what we've been doing recently. Kind of choppy consolidation. Look what we have right here. Way to put a bow on top of this whole damn session. Up close candle, followed by a down close candle. There's your bearish order block right there. Pretty cool. Um, so yeah, down into the final minute here. Of course, if anybody has any questions, feel free. I'll just add one thing on Adobe here. The overarching trend is still technically bearish because of what we have, or what we had back in, geez, highs of November. But again, this lower time frame look right now is has been bullish, of course. So that's something to take into account. I don't like that we did not sweep that low right here at 256. I know it sounds crazy, but that would have been giving me a much better feeling on us continuing to progress and move higher. Um, so yeah, that's all I got. So if anybody needs anything, feel free to reach out. But this thing's gonna cut us off here in a sec. So if you want, just shoot me a message in the Discord and we'll get after it. So I will catch everybody later.